Good morning, students. I welcome you in our income tax class. I am C. Ankit Sharma for your income tax faculty. For today's session, today will be the discussion of problem solving class in which we are going to solve the problem scenarios, questions, concept issues, which is related to basic concept chapter number 1 and basic residential status chapter number 2. So I believe you all are doing very good, studying very hard, and to you all are doing very hard work to achieve the goal of your life, that is to become a chartered accountant as soon as possible. So namaskar, swagat, welcome in your class once again. Let me see, there was a query, a huge query from Mr. Balamurgan KR. First of all, let me see what that query was, and I believe that query related to a question also, that is in your residential status question. I believe a test your knowledge question part it was, but I will solve it for you, Mr. Balamurgan. Don't worry. Good morning, Neeraj. Good morning, Adil. Good morning, Shraddha. Good morning, Purnima, Theosami, Santosh, Lakshita, Anil. Good morning to all of you. Archana, good morning. Archana is saying, I have a doubt regarding how we will know which method will be applicable or which process we have to calculate. Archana, are you asking this question regarding the basic concept calculation of tax provision, or I guess believe that your question related to that concept only? So that would be mentioned in the question that you do need to calculate tax as per default tax regime or optional tax regime. That would be given in question. So you have to solve that question accordingly. If the question is silent, then you have to solve that question by both method. So that would be a more work, more calculation in that question. So if question is silent, you have to solve it via both method. And if the question says that you have to calculate tax, which is most beneficial to the assessee or to minimize the tax liability, that also means you have to calculate tax via both method. Okay. Saipa, good morning. Shamli, good morning. Satish, good morning. Mujahid, good morning. Shireen, good morning. Riddhi Ben, good morning. Linga, good morning. Geeta, good morning. Hina. Hina Kumar, sir, if time permit, do take some past year sums, please. If it is possible, definitely I'm going to take it. Okay. But our first target is to solve all illustrations, queries, all test your knowledge questions, and 4 MCQ sheets with numerical question also, which I have prepared. First of all, we have to cover that concept. And with that also, we have to summarize the surcharge chart also. So we have discussed surcharge provision in the basic concept, but there is a surcharge chart in which there are some specific provision which we need to discuss again. Raju is saying, good morning, sir. I'm eagerly waiting for your class. Thank you for the appreciation. Rajiv is saying, good morning on the query portal. So as usual, before starting the class, there is thought for the day for all of you. And a very, very beautiful thought and very true also. And you can see it says, the bad news is that time flies. We cannot control time. That is going to fly. Nobody can control time. But the good news is that you are the pilot. So it's a kind of plane, aircraft, which is going to fly. And the very good news, you are the pilot. You are the one who will decide the direction, where to take yourself with that time. You know, only one thing, I guess, in this world is equivalent with everyone. There is something which is equal to everyone, whether it's me, you, or anyone in this world, they all have one thing which is equal. Nobody have more than one, nobody has less than one. And that is time. We all have 24 hours. And that's the same for you, me, Mr. Ambani, Elon Musk, everyone have the same time. But what matter is how we utilized it. Look, the person, the student who is going to, I guess, going to be the AIR 1 exactly is having 24 hours like you and me. But how he utilize or she utilize that time duration, that makes a difference. So you are the pilot of this time scenario, this time plane, this time, everything is time. And you have to decide in which direction you need to take that flight. Okay. So that's the one thing which is equivalent with everyone, and your future will be decided how you are going to utilize that time. So that was thought for the day for all of you. So please utilize wisely. Good morning, Meenu. Archana is saying illustration 8, I have solved it, but can you explain the question regarding how it will be calculated? Let me see illustration number 8 of basic concept. I guess I have discussed that in the class, earlier class also. Illustration 8. Look, the illustration 8 says, compute the tax liability of Mr. D, aged 65 years, in a most beneficial manner. So I have told you, when the question asks you to calculate tax to minimize the tax liability, or in the most beneficial manner, that means you have to calculate tax via both methods, as per default tax regime and as per optional tax regime. And you have seen that in this question, the income has been given 5 crore 1 lakh rupees. So marginal if concept also applicable. Let me tell you in very short. In this illustration, you can see Mr. D information was given. Age 65 year. And question has been asked to calculate tax most beneficial to the assessee. So most beneficial means to reduce his tax liability as much as we can. Clear? So if that line has been given in the question, so that means we have to calculate tax as per both method, default tax regime and as per optional tax regime. Under default tax regime, because the income is slightly exceeding 5 crore rupees, so marginal if concept would not be applicable in this case. If we have to calculate tax, you can see in this case, normal tax calculation you have to done. And accordingly to that, first 4 lakh rupees is exempted, etc. So the tax calculation on 5 crore 1 lakh rupees would be, in this case, 14 lakh 1 crore 46 lakh 10,000. Clear? The calculation has been given in the question, so I am not solving it again. The surcharge would be 25% because the maximum rate of surcharge is 25% if in case of default tax regime, the income exceeding 2 crore rupees. So that is going to be added. After that, there would be cess applicable 4%. So total tax would be 18993,000. But in case of optional tax regime, because the surcharge rates change after 5 CR, before 5 CR, that is 25%, and after 5 CR, it would be 37%. So the marginality concept we are going to solve with it. And for that, we have to calculate tax, first of all, on the income which has been given in question. That means 5 crore 1 lakh rupees, you have to calculate tax on that. And you must have gone through with the solution, and you would see that the tax with surcharge would be 20330,800. Then step 2, you have to calculate tax on 5 crore rupees, up to which the surcharge rate was preceding applicable. Lower surcharge rate was applicable. So from 5 crore 1 lakh, the surcharge rate is 37%. But in the second step, we have to calculate the amount of tax on that total income, up to which the reduced surcharge rate was applicable. And in this case, it would be 5 crore rupees. If you will calculate the tax, that would come 185,125,000. Then as per the marginality concept, you have to find out the difference and accordingly you have to solve it. I believe you must have taken the marginality concept class in, I guess, day 2 or day 3. So if you have taken that class, you will understand how to solve that marginal leave concept. I hope it's clear. Okay. Neeraj Kumar, the most beneficial in this example, of course, the normal tax of default tax regime is lower than against the optional tax regime. So assessee need to pay tax as per the default tax regime. Clear? Okay, clear. Next is good morning. Is the question one asked by Mr. Bala Murugan. Let me discuss that question with you. A sort of illustration, similar illustration in test your knowledge also. But whatever Mr. Balakrishnan was asked, let me solve first that. So for all of the student, I'm writing down what Mr. Balakrishnan has been asked, and it's a very simple question. I'm just giving you the main information. He's saying, suppose there's Mr. A who is a non-resident who lives outside India and he is a citizen of India. The first relevant information was this. Now he said, or in the query it has been written that he is visiting India 50 days every year from last 15 years. I guess this is test your knowledge questions number, let me tell you, so you would be able to read that complete question also. That was even illustration either or test your knowledge, because I have gone through with that kind of question yesterday. Let's see. Station not 1, not 2, not 3, and not station number 4. Arju is saying in the study material there is explanation regarding surcharge that include dividend income and capital gain. Exactly. So that exactly I have written. You can see the surcharge chart we are going to discuss today. In that surcharge chart, that problem is going to be discussed. Okay. Atitya is saying, good morning. Can you explain illustration 12 of basic concept? Yes, definitely. We are going to discuss that. There is one more query. Harsh is saying, sir, in question 8, under default tax regime, we are calculating marginally, but in illustration 10, we didn't. Because even if you'll try to calculate marginally in case of any question, illustration, now he's saying in question number 6 and 8, you can try marginal leave calculation in those question also. But you will see that there would be no marginal leave. Why? Because marginal leave concept would be applicable when your income is slightly above from that total income range when surcharge rate change. Like in this illustration, what we have solved over here, in which under optional tax regime, the income was 5 crore 1 lakh. Till 5 crore, the surcharge rate is 25%. After that, it has changed to 37%. So when income is just slightly above 2 or 3 lakh rupees from that limit, only in that situation, marginally concept would be applicable. Suppose in this question, if I have write it down that income is not 5 crore 1 lakh, suppose it's 5 crore 10 lakh rupees. And then if you'll solve it, there would not be any surcharge. So in those question, the marginal leave has not been calculated. You can calculate it by yourself and you will see there would not be any marginal leave applicable. In those cases, the difference of tax would be lower than the difference of income. So MR is applicable when difference of tax is higher than difference of income. So in those cases, there is difference of tax would not be higher than difference of income. So in this default tax regime, you can solve it as per the marginal yield concept. You can take step number 1, step number 2, and then step number 3, and then find out the difference. The difference of tax would not be higher than the difference of income. Next is Ms. Shraddha is saying, so do we have to show working of basic tax working when income is above 10 lakh, or we can directly take 110 or 1 lakh 12,500? You can take directly, you can write it down up to 10 lakh rupees. The tax would be 1 lakh 12,500 as well. Okay. Basa Baraju is saying, so when I am going to solve the question, there was a sentence that option of shifting out. So option of shifting out means optional tax regime. So the main regime is default tax regime. And if the question says you are opting the option of shifting out of the default tax regime. So that means you have to calculate tax as per optional tax regime. Okay. Arju is saying in scenario-based question, there is similar question related to including capital gain and dividend income. Yes, in I guess test your knowledge question also, dividend income and other income question has been given with surcharge. I am going to solve it after discussing the surcharge provision in detail. So marginality will be calculated only when there is a surcharge rate change. Yes. So if there is no surcharge rate change in any income, then there would not be any marginality, or the just income is slightly above. Like in case of default tax regime, the highest surcharge rate is 25%, and that is after 2 crore. So if the income has been given 2 crore 10 lakh, 2 crore 15 lakh, in that case also marginally would not be applicable, just because if you try to solve it and find it out the marginally, the difference of tax would not be higher than the difference of income. Via practice, when we solve this chapter, then salary question, then other question, then total income, you will able to find it out when marginally concept is going to be applicable. When income is just slightly 1 or 2 lakh rupees more from that range when surcharge has been changed. So let me solve this question of Mr. Bala Murugan. And Mr. A was a non-resident outside India, citizen outside India. He comes to visit India 50 days every year. And the third information, that now from 1st April 2024, he is permanently shifted to India. Permanently shifted to India. And now the question is, what would be the residential status for assessment year 26-27? So for the purpose of the status, we have to find it out that how many days he was in India for 25-26. And before that, the first thing we need to find out whether it is a normal case or it is a special case. In a special case, there are 3 specific cases, B1, B2, B3. And in case of normal case, there is only general condition, basic condition needs to be applied. So because now he has been shifted into India permanently, in last previous year, 24-25, he has been shifted into India permanently. So for the purpose of previous year 25, those only basic condition needs to be applicable. So it is a normal case. Basic condition 1, either more than 182 days in India in that previous year, or the 60 plus 365 days condition needs to be imposed. And you can see, because he is in India for this full year, full 365 days. So technically, he becomes resident as soon as he is in India for 182 days or more in the previous year, 25-26. Clear? Now, after becoming resident, we have to find it out whether he is a resident and not ordinary resident, or he is a resident or ordinary resident. Because he do fall in normal case, basic condition. So two condition, either of one, he needs to fulfill. less than 730 days in 7 preceding previous year, or 9 years or more non-resident out of 10 preceding previous year. If any one of condition has been fulfilled, he would be regarded as resident and not ordinary resident. Now you can see in previous year 25-26, he was in India for full 365 days. But for checking these condition, previous year days irrelevant. So we have to take 7 preceding previous year. That means 24-25, 23-24, 22-23, 21-22, 20-21, 19-20, and 18-19. So these are 7, in which in this year he was in India for 365 days. And for remaining 6 years, he was in India for 50 days every year. So how many days? 300. 300 plus 365, 665 days he was in India in preceding 7 preceding previous year. So he does fulfill this condition. And as soon as you fulfill this condition, you would be a resident and not ordinary resident. If you'll try to calculate this question further, he is also satisfying this condition also. But we do not need to calculate or check both condition. If first has been fulfilled, in that scenario, he would be regarded as resident and not ordinary resident. I hope it's clear, Mr. Bala Murugan here. Illustration 5, Santosh is asking in detail. Illustration has been already in detail. Why do you ask me to solve illustrations in detail? Illustration 5. The calculations you need to do yourself. I would just going to tell you 51 lakh rupees. This question we have already solved. Who is asking this illustration? Santosh, I believe you did not attend the second or third lecture. In this illustration, the question is saying that you have to calculate tax as for option to shifting out of section 115 BS, यानी कि optional tax regime. You have to calculate a tax as per optional tax regime because income is slightly exceeding 50 lakh till when surcharge is not applicable. So this illustration we have discussed in the class also. In the starting of marginal leave, we discussed this kind of illustration. So even if you want, you have to calculate tax on 51 lakh rupees income initially. Whatever would be the tax, you have to apply the surcharge of 10%. That would be your tax, and that would come 1476750. Step number 2, you have to calculate tax on 50 lakh rupees income. That would be 1312500. Difference of income is 1 lakh, and the difference of tax is more than that, 1,64,240. So difference would be marginally. So please do not ask those kind of questions, student, which we have already discussed in the class. That would kill our time, what we have limited. So that's what I was discussing. We all have equal time. So please utilize your time wisely. So irrespective that you are asking this question over here, I think you should go and watch the lecture in which that has been discussed. Adil is saying 730 is not included. 729 is means less than 730. Yes, Adil, exactly. Arju is saying page 2.21. The chart is just the explanation of income deemed to arise, etc. We have already gone through with the deemed to arise provisions, and whatever question you are, 50,000 question you are asking, Arju, we have discussed in, I guess that is the point number 8 in the deemed to arise case. And I have told that that is going to be discussed under income from other source. That is in the chapter number also mentioned over there that would be discussed in chapter number 5. So please be attentive in the class. And I know that I have discussed that point and I told you that this is related to gift, etc., which is going to be discussed in income from other source chapter. Anil is asking, sir, in case individual, what's the switching criteria? How many times he can switch? Can he switch every year? If you are a salaried person, you can switch for any year. If you are a business person, then you switching is allowed only once in the lifetime. That is going to be discussed under PGBP chapter in detail and return of income option. So those topic which is going to be covered in further chapters in detail, that's we did not covered over here because that would be difficult to understand, like special rate of taxes for special income, etc. Arju is saying sorry. No, no need to say sorry. Just be more attentive. We have discussed it. Okay, it's okay. Bala Murugan is saying thank you. Welcome. Dhanlakshmi, test your knowledge question number 2 is similar to this question. Okay, Dhanlakshmi said that. Let me see. Yes, exactly. That's what I was searching. Exactly. Balamurgan, your test your knowledge question number 2 is just same whatever you have asked. There is just days, 30 days are there instead of 50. Exactly, other informations are same. Thank you. Who was that girl? Dhanlakshmi, thank you. Hina is saying, sir, why we have not taken a special case in this sum because he is visiting India, but he has permanently shifted into in India in last year, Hina. 24-25, he has been shifted permanently into India. Permanently. In 24-25. So in 25-26, he is a person who permanently residing in India now. And that concept of special condition apply when somebody is permanently residing outside India but only comes to visit. So in previous year 25-26, he does not come to visit India. He is being permanently shifted. So that does not fall in B1, B2 or B3 case. Vasa Varaju is asking what is the meaning of normal provision of the act. Normal provision means the default tax regime, you have to calculate tax as per normal provision. Fine. So now I am going to discuss with you the surcharge provision. The surcharge concept we have discussed yet was like this, that if you are under optional tax regime or you are under default tax regime, the surcharge concept we have discussed is like total income if exceeding 50 lakh up to 1 crore, the surcharge rate would be 10 and same is here 10. If it is exceeding 1 crore and up to 2 crore, surcharge rate would be 15%, same. If income exceeding 2 crores and it's up to 5 crores, the surcharge rate would be 25%. And also same over here. But if income exceeding 5 crore, then the surcharge rate would be 37% and this will remain 25% over here. So the difference between the surcharge concept in these two scenario or two regime is this: exceeding 5 crore. Everything else is same. Now these surcharge rates are applicable and accordingly the information of income has been given in the question. We have to apply the surcharge rate on the tax calculator. But this would be applicable if there are some special rate of income. There are some special rates of income on which slab rate does not apply. So these surcharge concept is applicable when there is income on which slab rate has been given. But there are some special rates of income, that is section 112, 112A, 111A and dividend income. These are related to capital gain. long-term capital gain on equity share is specified, and short-term capital gain on specified equity shares. So what are these gain? How we need to calculate it? What are these income, etc.? That is going to be discussed in the relevant chapters. Do not bother about it. But if in the question special rate, these four special rates income has been notified, these only four. If these four income not given in the question, then the surcharge rate would be like this: 10, 15, 25, 37. But if these income has also been earned by the assessee. For example, assessee is having business income of 1 crore, and assessee is also having dividend income of 50 lakh. So in that situation, surcharge rates could be changed. If assessee is having 5 crore rupees income from business or salary or house property, and also having income under section 112 or 112A, etc., then surcharge provision is going to be changed slightly. Any of these income, I am not saying all four of these should be included. Any of these income, if has been given in the question, then the surcharge rate is going to be slightly changed. What is the change? Let me show you. So if total income, there would be two situations. We can say option 1, if assessee does not have any income under section 111A, 112, 112A and dividend. In that case, surcharge provision normal, we have discussed. If does not, so if does not, then surcharge provision we have discussed. If more than 50 lakh, 1 crore, 10%. Under both regime, it's same. 1 to 2 crore range, 15%. 2 to 5 crore range, 25%. And more than 5 crore, it's 37%. But in case of default tax regime, it would remain 25%. We have the specific chart also for this. Do not worry about it. Understood? So this we have discussed. Now, what will happen when the assessee income is also including these category of income? Option 2 or scenario 2, whatever. So option 2 says if assessee do have any of these income, any of, maybe only section 111A or 112, etc., any of these income, then surcharge scenario will be changed. 111A, 112, 112A or dividend. So now in this case, surcharge would be changed. So there would be three situations: A case, B case, and C case. Case 1 says if including these income, these income means we are talking about these special category. If after including these income, total income is up to 2 CR. So in this option, applicable when you do not have any of these income. Option 2 would be applicable when you do have any of these income or more than that. In this case, first case says, suppose after including these income, my total income is up to 2 crore rupees. That means suppose you have business income of 90 lakh rupees and section 112 income is 80 lakh rupees. So now this example will fall in A category because your income is up to 2 crore rupees and up to 2 crore after including this income. Clear? So my total income is 1.7 crore. Of course, for applicability of surcharge, the total of these two income must exceed 50 lakh rupees. Suppose the business income is only 20 lakh rupees and 112 income is only 15 lakh. So that means your TI is 35 lakh. Up to 35 lakh, there would not be any surcharge. Surcharge is applicable only after exceeding 50. So a case when these income including the normal business or other income is up to 2 crore rupees. So if that happens, then there would be surcharge provision. If it is after including your TI exceeding 15 lakh up to 1 crore, then the surcharge on the tax would be 10%. Whatever tax would be on 1 crore 70 lakh rupees, the surcharge would be 10% of that. If after including it's exceeding 1 crore, but up to 2 crore, because in category A, only those cases will fall when your TI does not exceed 2 crore rupees. So in that case, surcharge rate would be 15%. So you can see there is no new concept. Same concept was here and same rates are here. So in my example is because it's 1.7 crores, so this case would be applicable. Whatever would be the tax on 1.7 crore, the surcharge would be 15% of it. Suppose this business income is only 10 lakh and 112 is 80 lakh. So aggregate would be 90 lakh. If that 90 lakh, then surcharge rate would be 10% applicable. Understood? So in case A, there would be two situations whether surcharge rate would be 10 or 15. Because up to 2 crore case is only including in option number A. The B is saying when your TI is exceeding 2 crore. The case number say, but if your TI exceeding 2 crore. So the B is if after including these incomes, TI is more than 2 crore. Because up to 2 crore cases has been included in the first category. So second would be the cases in which your TI exceeding 2 crore after including these incomes. Suppose your business income is 1 crore 50 lakh and your 111A income is 2 crore. So total is 3.5 crore. So your income is exceeding 2 crore, but after including these income. Before including this, it is less than 2 crore, but after including, if it is exceeding 2 crore, that would be your case number B. And it says, whatever would be the tax on your income, like we have to calculate tax upon 3.5 crore, on that tax surcharge rate is fixed. Very simple case, only 15%. Understood? That surcharge rate would be 15% in all case. Even if suppose the business income is 1.5 crore and 111A income is suppose 4 crore. Total income is 5.5 crore. Still surcharge rate would be only 15% on the tax of 5.5 crore. Understood? Now C is the last case. When A and B is not applicable. When it is not applicable, understand it carefully. If your total income exceeding 2 crore without including specified income. Understood? Like in case A, your income is up to 2 crore after including these income. In case B, your income is exceeding 2 crore after including these income. But if without even including these income are in the question, but even without including these income, your normal income is exceeding 2 crore. In that case, C case would be applicable. That means suppose your business income is 3 crore. Now you can see your income is exceeding 2 crore without even including specified income. And 112 income is suppose 1 crore. So total is 4 crore. Now this is interesting case. So it says your total income without the help of these income exceeding 2 crore rupees. In this situation, things will change. The tax on specified income, whatever would be the tax on specified income of 1 crore. The specified income is 1 crore. On that tax, the surcharge rate would be 15%. Whatever would be the specified income, we have to calculate tax on those incomes separately, and the surcharge rate of 15% needs to be applicable. And whatever would be the tax on normal incomes, that means on 3 crores, the surcharge rate would be, in this example, up to 5 crore. If income is exceeding 2 crore, but up to 5 crore, the surcharge rate would be 25% in this. And if exceeding 5 crore, suppose the normal income is exceeding 5 crore, then the surcharge rate would become 37% under default tax, under optional tax regime. So in this example, on 1 crore, the surcharge rate would be 25%. And on 3 crore rupees, the surcharge rate would be 25% needs to be applicable. Suppose if this case, I will write it down, business income is suppose 6 crore and 112 income is 2 crore. Then on 2 crore rupees income, surcharge rate would be 15%. And on 6 crore rupees income, the surcharge rate would be 37%. If it is a default tax regime case, then in both cases, surcharge rate would remain 25%. Whether exceeding 5 crore, whether not exceeding 5 crore. So up to 5 crore, the surcharge rate would be 25% of the tax. And after that, the surcharge rate would be 37% of the tax. So these are the exact surcharge provision. And I have prepared the diagram for it also. Everything has been explained in the diagram very clearly. So new surcharge provision for individual HUF, AOP, BI opting out of the default scheme. So we are talking about the optional tax regime. So case 1, if total income does not consist long-term 112A, 112 short-term and dividend income. So if these incomes are not in the scenario, so normal surcharge rate provisions applicable. We have already seen by the help of the diagram. If these income have been included in the income, in that case, category A, if total income including this income up to 2 CR, if it is more than 50 lakh up to 1 CR, 10%. If more than 1 CR up to 2 CR, it's 15%. What if more than 2 CR? That will case fall in category B. If after including these income, the total income exceeding 2 CR or 5 CR does not matter, the surcharge rate would remain the same, 15% on the total tax. If total income without considering or after excluding these income is more than 2 CR or 5 CR, so that means those case does not fall in category A or B. In this case, on special income, the rate of surcharge would remain 15% fixed. And on other incomes, if that is more than 2 CR up to 5 CR, 25% of tax. If it is more than 5 CR, in that 37% of tax would be the surcharge rate. In case of default tax regime, only one difference, and that is In other income, in this case, surcharge rate would remain only 25. No 37% concept is there. I have prepared some example also for all of you. So let's see which case will fall in which category. So देखिए first case, these are 7 examples separate. So example 1 was over here. Suppose in the question other incomes are 70 lakh and the specified incomes are nil. No specified income, only other income is there, and that is for 70 lakh. So which option or which case would be applicable? That would be scenario 1 applicable. Option 1 is going to be applicable. So no special income, then normal provision of surcharge would be applicable. And because income is between 50 to 1 crore, 10% surcharge rate would be applicable. Second example. Other income is 80 lakh and specified income is 1.90 crore. So now the provision says that your total income is exceeding 2 crore after including these special income. After including. So which case would be applicable? You can see I have write it down the case also. Option 2, B case. This is applicable. When your total income after including these income exceeding 2 crore. What is the surcharge rate? 15%. Clear? Now third case, 90 lakh is this income, 80 lakh is special income. So that means up to 2 crore rupees is your total income. And because your total income is up to 2 crore rupees, which category you fall? Option 2, A category. Surcharge rate would be 15. Why 15? Because income does fall in the range of 1 to 2 crore. Suppose your other income is 1.3 crore and your special incomes are 2 crore. Aggregate is exceeding 2 crore. So option 2, B case is applicable. 15% rate need to be applicable. Now your other income exceeding 2 crore without even including these income. So aggregate is 5 crore, but without even including these income, UR is over 2 crore. So in that scenario, on 1 crore tax, surcharge would be 15%. On 4 crore rupees tax, the surcharge rate would be 25%. Option 2, C case applicable. Suppose your other income is 6 crore and special income is 2 crore. So aggregate is exceeding 2 crore even without including these special income, your other income exceeding 2 crore. So again, C case applicable, 15% on 2 crore, and because this is exceeding 5 crore, so 37% would be the surcharge rate. So now this is a good interesting point number 7. Suppose your other income is 4 crore and there is no special category of income. Remember very carefully. When there is no special category income, the case will fall in first simple case. Because the income is exceeding 2 crore up to 5 crore, the surcharge rate would be 25%, and this is option 1 applicable. This chart also has been uploaded with the initially the notes with basic concept with examples also. So you can now able to understand how surcharge provision works. The chart for default tax regime also prepared, and you can see there is only one difference, and that is this. There is no 37% rate is here. It has been also mentioned in the note. So that was the surcharge provision, what I would think that really important to discuss all with you. Now see if there is any query. So the 12 lakh rebate is only applicable in default tax regime, Neeraj? Yes. In case of optional tax regime, the rebate is up to income 5 lakh rupees. And you are writing wrongly. Actually, you are writing the 12 lakh rebate. It's not 12 lakh rebate. It is rebate is applicable up to your total income is 12 lakh. Rebate is 60,000 rupees. Dia is saying, sir, what are these 112, 112A, 111? Can you say in short? No. We should not take the escalators. We have to take the stairs. So in short, there's nothing in short. Shortcut is wrong. there are specific chapter of capital gain, I guess more than 180 pages in which that needs to be discussed. So shortcut I always avoid, and I also request you, do not try to learn anything in shortcut, not at least under income tax. We will discuss it when the time will come. Sir, between C and B, we can either opt B or C option, right? In case income includes special income. No, we do not have that kind of choice, Mr. Anil. These are specific exclusive case. Either B would be applicable or C would be applicable. If B is applicable, C automatically won't be applicable. If C is applicable, then B automatically won't be applicable. Read it carefully, you will get it. If the chart has been uploaded, you can zoom your screen. If I'll zoom it, so the part would be not able to see. 30 lakh and a special income is 40 lakh, then which of these surcharge provision would be applicable? The case A, after including your income is up to 2 CR. Look, in the question, as soon as special income has been given, as soon as, so that means these provisions are going to be applicable. If a special income has been given, automatically these provisions are going to be applicable. And after including it, because in your question, you are saying, suppose it's 30 lakh rupees other income and 40 lakh is special category of income. So it is up to 2 crore. So this case would be applicable, and aggregate is 70 lakh rupees. So accordingly, 10% tax surcharge would be applicable in this case. Archana is saying same percentage of tax in both the cases, but in special income tax has been categorized. Yes, due to special category of income, we have to categorize it like this. So in sixth case under DTR, yes, exactly the rate would remain 25% of surcharge. So can you tell in this 2 chapter, we need to remember section number if required, then which we have to remember. You have to try to learn all sections, and the important section you have to opt yourself. Those are more relevant, like section 6.1, 6.1a, section 9.1, etc. Not all is required to be remembered. The majorities are on the basis of which maximum questions are going to be framed. But before the learning of section, the important thing is to learn the provision. The provision is priority. Solving of questions are priority. Sections are the add-ons. Sir, in case less than 2 crore, less than 5 crore, which one applicable? Arivansh, if it's less than 2 crore, case A would be applicable because K is applicable on up to 2 crore rupees. As soon as it exceeds 2 crore, the E with case number B is going to be applicable. Okay, so that was surcharge concept we have just discussed. Let me see. I would like to discuss now agricultural integration provision illustration, which has been given in basic concept chapter number 1. Is there any problem in illustration 1 and 2 of basic concept under integration provision, students? Or we should now start solving test your knowledge questions? Purnima is asking, sir, to calculate tax liability, do we need to add the capital gain for the total income calculation? Yes, we do need to add on. We do not bother about how to calculate tax on capital gain. We are not discussing how to calculate capital gain tax. We are just discussing what surcharge rate is going to be applicable. Because even institute know that in this basic chapter 1, you won't be able to understand the capital gain taxability, the calculation of tax liability. That is not yet your cup of tea. You have to wait for it. So just institute is just trying to make you understand that what surcharge rate needs to be applicable. That's it. If you are able to find out as per the chart that what surcharge rate do I need to applicable, the work has been done. how tax of those income needs to be calculated, what are section 112, 1128, etc. It is just like that during the preparation of CA intermediate, you are thinking about the preparation of CA final. So the time will come, just be the part of the journey. Complete your journey, destination would be there later or sooner. So do not in rush. No problem in illustrations. Anil is asking, sir, in case we want to apply separately surcharge provision for special income and normal income, can we do that, sir, keeping all factors aside? So these are hypothetical questions I would or cannot actually answer. We have to follow, which is, or actually the law it is. We have to go through it. Uh, Mr. Basa Ravaju is saying, sir, I didn't get that when I gonna read agricultural that. When I gonna read that agricultural, we have discussed the agricultural provision in third session of basic concept. It is in the notes also, what I have uploaded. So just to note, can you say 111A, 112, 112A? These are short-term capital gain, long-term capital gain for equity shares, etc. The capital gain incomes, you can write it down. Dhanlakshmi is saying illustration 1, illustration 2, a basic concept of agriculture income. In which illustration do you have problem, Dhanlakshmi? 1 and 2 both. Those are simple. And when I asked in the, chalo, no problem is saying by Satish. No query, very good. Mean about increase 5,000 per annum. And also, what does that mean, Basavaraju? I am not understanding. Increase 5,000 per annum and also no query in illustration 1 and 2. So illustration 1 and 2 does not have any query. So, and if do you have any query in illustration 1 and 2, which is regarding the integration of agricultural income or composite business, those kind of question we are also going to be solved in the test your knowledge questions. So without wasting the time, we are now moving on to the test your knowledge questions one by one. And this is going to be an interactive section. There are some questions you need to answer. I am going to ask you. Page number 1.96. So are you ready for this session, students? Okay, these are test your knowledge questions. Archana is saying, sir, in any question, what we have to check, can you please explain? What does that mean? Question, Archana. What are you asking? I am not understanding. In any question, what we have to check? And these kind of query, how can I answer? Is it regarding basic concept, agricultural income, residential status, incidence of tax, regarding what you are asking this? Mustafa is saying yes, he is ready. Arju is saying it means while calculating surcharge under default tax regime, income more than 2 CR and above 25% surcharge. Exactly. There's no 37% category. So all are ready. Chalo, good to go. Like in this test your knowledge, first, second, third, fourth, theoretical provision. Fifth, till fifth, there is theoretical provision. After that, now from illustration number 6, we have to solve this question. And I believe you must have tried those questions also. Question number 6. Mr. Sumit, a resident in India, earn income of 15 lakh from sale of rubber manufactured from latex obtained from rubber plants grown by him in India. Okay. and 20 lakhs from sale of rubber manufactured from latex obtained from rubber plants grown by him in Malaysia. So that is outside India. What would be his business income, assuming he has no other income? So technically, they wants to ask the taxable income. Monisha is saying on query portal, sir, whether to take normal income plus a special income to find the total income to check the eligibility of rebate, whether marginal relief is applicable in a special case of surcharge also. Yes, for the purpose of marginal relief also, you have to take the total income, including the special rate income and including the normal income. Both needs to be taken. Okay. Let me open this question in my separate laptop. So I will open this. Just give me a minute, students, because I will open the screen for solving the questions. I have to read and write down the question separately. Illustration, it has been done. Sure. Yeah, Mara. Illustration, test knowledge, 6 question. So let me solve this question. Very simple question. So the question is, Mr. Sumit is having 15 lakh from sale of rubber in India. And he has also one business out of which his income is 20 lakh rupees, and that is outside India. That is in Malaysia, and that is 20 lakh. So whatever agricultural income you are earning from outside India, that is going to be your business income. That is simple. The agricultural land should be situated in India. So that is your non-agricultural income. Now, in case of rubber business, what is the percentage has been defined by the income tax to find out the agricultural and non-agricultural income? What is that percentage, students? It is 35% and 65%. Exactly. Correct, Nagar. Correct, Pooja. 65% agricultural and 35% is non-agricultural. Mustafa is saying both are business income, but only 20 lakh is taxable. No, Mustafa, because the latex business, rubber business, it's a composite business. And in case of composite business, there should be agricultural and non-agricultural, both applicabilities there. So that's why out of this 15 lakh rupees, 65% is going to be your agricultural income and 35% is going to be your non-agricultural income. Someone just gave the wrong answer. Who was that? Purnima is saying 65 agricultural, correct? And you must remember that there was percentage like 65, 35 for rubber. For coffee and tea, it's 60%, 40%. For roasted coffee, it was 75%, 25%. So yeah, if you ever forget, if you remember the percentage, but if you forgot in any case, which is exempted, which is taxable. So always remember the higher would be always agricultural income in all cases. The higher percentage is agricultural. So technically the lower percentage would be always non-agricultural or taxable. So out of this 15 lakh, now 65% is agricultural income. That is 9.75 lakh. And 35% would be your non-agricultural income. That was 5.25 lakh. So the total non-agricultural income is 25 lakh 25,000. And agricultural income is 9.75 lakh. Now suppose, this is a very easy question, but why I am trying to solve it? Suppose in this question now I will ask you whether integration provision would be applicable or not. If I'll ask you to calculate the tax need to be calculated as per integration provision or not. Suppose it's a case of the question is to Mr. Sumit. He's a resident. Suppose age is 40 years. He's a resident. And now in this question, I'll ask you to calculate tax as per optional tax regime. So integration provision would be applicable or not. First of all, you have to tell me yes or no. Integration is going to be applicable or not. Anil is saying we have to test agriculture in front of you. The information has been given, Anil. You have to just tell integration concept has been applicable or not. For the purpose of integration, your agriculture income should exceeding 5,000 rupees and your non-agricultural should exceed the basic exemption limit. In this example, he is an individual. Agricultural income is exceeding 5,000 rupees. It is, you can see 9.75 lakh, exceeding 5,000. And non-agriculture exceeding the basic exemption limit. What basic exemption limit is applicable? 2.5 lakh in this case. So if the question asks you to calculate the tax, then you can see that integration provision is applicable. You cannot calculate tax upon directly on 25.25. You assume this is agricultural income exempt from tax, and you're just going to calculate tax on 25.25. Do not do this. This would result in wrong solution. So integration is applicable, and accordingly, step number 1 would be tax on full income. That means, as per integration, if the question asks you to calculate tax, then in first point, we have to calculate tax on 35 lakh rupees as per optional tax regime, normal concept. Tax surcharge would not be applicable because it's less than 50 lakh rupees. So this is my step number 1 calculation. Tax on 35 lakh rupees. Step number 2 says agricultural income plus basic exemption limit. So agricultural income in this question is 9.75 lakh and basic exemption limit is 2.5 lakh. So now in this case, I have to calculate tax on 12,25,000. So if you calculate tax on 12,25,000, that would come ₹1,80,000. On 35 lakh also, if we need to calculate tax, that would be 8,62,500. No surcharge in this case also because income is not exceeding. And step number 3, the difference. That would be 682,500. Rebate. Now you will decide whether rebate is applicable or not. And rebate would depend upon your non-agricultural income total. So your non-agricultural income is 25.25 lakh. And if your non-agricultural is exceeding the 5 lakh limit of rebate applicability, you cannot get the rebate. So there would be no rebate. 4% cess you need to applicable in this case, and the total would be your answer. So please remember, if there is a agriculture income question and tax is asked to be calculated, then always think about the integration concept. Suppose in this case, if the question asks you to calculate the tax as per default tax regime, then what would be the changes? On the first point, we have to calculate tax on 35 lakh rupees. Again, no surcharge. On second point, the amount would be changed. The agricultural income and the basic exemption limit is 4 lakh. So technically, we have to calculate tax on 13.75 lakh rupees. Whatever the tax would be there. Surcharge again not applicable. Then the difference would be there. no rebate, etc. Why no rebate? Because again, 12 lakh rupees basic exemption limit rebate concept has been exceeding because my non-agricultural income is exceeding 12 lakh rupees. I hope it's clear now. So this is very important. Whenever there is agricultural income, please do not forget about integration concept. That is utmost important. Applicable, 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 applicable. Okay. Sai Pavel is saying age is not mentioned. I have just changed the age over here. Where are you? आप लोग ठीक से सुनते नहीं. I have write it down in this example. Age is 40 year. But if the question is silent, always assume the assessee is individual, resident, and having age less than 60 years. So 2.5 lakh exemption need to be applicable. The question silent, always assume it is a resident individual, age is less than 60 years. And if the question is silent about how to calculate tax, you have to calculate tax as per both region. Now tell me, is basic concept chapter is difficult? When we were discussing the rates of tax, surcharge, provision, agricultural income, you might feel that this is a difficult chapter, but really is it difficult? You just need to learn rates of taxes provision, surcharge provision. What happens because you are actually interacting with income tax, these rate scenario first time in your life. So whenever there is something new, you always feel it's complicated or difficult. But as soon as you will start solving the question, etc., let me tell you, basic concept chapter 1 and residential is chapter number 2. They are easiest chapter of income tax. That does not mean other chapters are difficult. You will feel these chapter now easy because you have gone through with the provision, you have practiced it, you have revised it. Like residential status is so complicated when we start studying it. So many conditions, so many calculations, so many exception, etc. But we are going to solve test and knowledge question of agricultural residential status. And after that, you will feel that, okay, this is very simple. The difficult chapter is yet to come, that is salary. Salary is a huge chapter, gigantic. And let me tell you, when you will interact with the salary topic, you will feel this is difficult. But as soon as we will end that topic, you will feel, okay, this is easy. So everything, if you are sincerely studying, if you are taking interest in anything, as I've told you in the first class, if you have created your interest in studies, interest in income tax or accounts or law or in anything in your life, you cannot find that thing difficult. And that is a promise from my side. So if any of you has generated interest in income tax, now you are finding all these things very fascinating. You can teach people. Look, if you have agricultural income and other agricultural income also, that is not that agriculture is exempted. You have to calculate tax as per integration. You can tell other person about the now rates structure. You can calculate the tax of normal person with surcharge, cess, rebate provision. So that's a knowledge which do not possess by a lot of people. You are very rare that you know how to calculate income tax. Okay. So enjoy this knowledge. Just be proud of yourself that I know how to calculate income tax. The time you will start enjoying those your knowledge, the time you will start having proud upon yourself, you will find these things interesting. चलो देखते हैं नेक्स्ट क्या है. Okay. Yes, of course it is easy. I have told you. Don't worry. Nothing is difficult. Easy. It is easy. Salary would also be easy. Do not worry. Your teaching style is very helpful. Thank you so much. Neeraj is asking, sir, we study that agriculture is exempt from income tax, but we also study that only state government has the power to make law on agriculture income. Yes, exactly. If an exemption needs to be given or not, that will decide by the state government. So agriculture income is not 100% exempted. It is 100% exempted for those farmers, those do not have any other income. But if you have other income also, then integration concept applicable. So technically you can see if you have other income as well as agricultural income, then it is not 100% exempt. According to integration concept, you have to pay some amount of tax on it. Okay? Chalo. Moving on to the next question. Thank you for your appreciation. Question number 7 is there. Mr. Raja, a resident Indian earns income of 10 lakh from sale of coffee grown and cured in India during the year 26-27. His friend Mr. Sham, a resident Indian, earned 20 lakh rupees from sale of coffee grown, cured, roasted and grounded by him in India. So one is roasted coffee in India and one is without roasted coffee. So in case of roasted coffee, we know the percentage is 60-40. So this is 10 lakh rupees is like coffee beans, not roasted. So 75%, 7.5 lakh would be agricultural and 2.5 lakh would be non-agricultural. And in this case, it's 20 lakh because it's roasted coffee. So 60-40 provision would be applicable. 12 lakh rupees and 8 lakh rupees. This is agricultural. This is non-agricultural. Now again, if I'll ask you to calculate tax in this case, whether integration provision would be applicable on Raja or not. And in this case also, whether integration provision would be applicable or not. Aditya is saying, sir, in resume tax, 37% may show where should 35% show? Where should 35%? What is now 35%? In resume regime, you might try 35% is no tax liability. Kyosami are saying, sir, I request you to roll all 5 sections of DT because your teaching was very understandable because I see many times teacher change. You can write this to board of studies. I guess there would be a feedback form or something. You can tell them. So if they'll allow, I will definitely going to do that. Now you can see in Raja case, integration concept will not be applicable because agriculture income exceeding 5,000, but non-agricultural does not exceed the basic exemption limit. The basic exemption limit would be minimum 2.5 lakh in case of optional. In case of default, it would be 4 lakh. So because if the question asks you to calculate the tax, integration provision would not applicable, there would not be any tax. But in the second case, of course, integration concept is going to be applicable. So always check before calculating tax that whether integration is applicable or not. Now, question number 8. The Jain HUF in Assam comprises of Mr. Suresh Jain, his wife Mrs. Sapna Jain, his son Mr. Sarthak Jain, his daughter-in-law Mrs. Preeti Jain, his daughter Miss Seema Jain, and his unmarried brother Mr. Preetam Jain. Which of the members of HUF are eligible for co-parcenary right? Read it and send me the answer. Only the name you need to tell that those are co-parcener. Who are co-parcener in question number 8? When there is no integration is possible, there would not be any tax. Even if you try to calculate, the tax liability would be 0. You can apply, Mr. Anil, in case of Raja, just try to solve the case as per integration provision. So it's a shortcut I am telling you. If integration not applicable, there would not be any tax liability. No tax is there. Okay, somebody's saying Suresh, somebody's saying Preetam, somebody's saying Suresh and Preetam, somebody's saying Sarthak, wife, son, daughter, brother. Okay, Shireen is saying Sham will be applied. So I guess you must have read that it is a case of Assam, and in case of Assam and West Bengal, Dayabaga Hindu law is applicable. And because of Dayabaga Hindu laws is applicable, in that situation, Saipa is saying in Raja case integration, no Saipa. In case of Raja also integration cannot be applicable. The basic exemption limit is 4 lakh rupees in that case. And his non-agriculture income is only 2.5 lakh. How it is applicable? So because in case of Deavaga family, only father has a right or the brothers. So in that case, only Mr. Suresh Jain and his brother Preetam Jain has the co-partnering right. Solution also given. You can go through it. Next question number 9. You have to calculate that under default tax regime, you have to calculate the tax on 51,25,000. So marginally concept would be applicable because income is just slightly above from that range up to which there is no surcharge applicable. So kindly solve this question yourself. I would like to solve question number 10 for you because it is including that surcharge concept we have discussed today on the specific incomes also included and the rates of specific income has been given. So this is test your knowledge question number 10 and this is a question we have to solve. So read this question first. Mr. Agarwal, aged 40 year and a resident in India, has a total income of 6 crore 50 lakh rupees, comprising long-term capital gain taxable under section 112 of 55 lakh, short-term capital gain under section 111A of 65 lakh, and balance is your other income 5 crore 30 lakh rupees. Compute his tax liability for assessment year 26-27 under the default tax regime and as per optional tax regime, as per both. So let's solve this question. That is test your knowledge, question number 10. So as per the information, you can see total income has been given in question, that is 6 crore 50 lakh. Under optional tax regime, first of all, we are solving this question as per optional tax regime. And out of this income, long-term capital gain income is 55 lakh rupees. You did not know what is the tax rate on this. So let me tell you that tax rate would be 12.5%. These tax rate is going to be discussed under capital gain chapter. The short-term income has been, the special category of these two income has been given, and this is 6 lakh, 65 lakh. And the tax rate is 20%. So the tax, not as per slab rate, on these income tax rates are straight. So this would be 6,875,000. I have already calculated that. This would be 1 crore 30 lakh rupees. So the tax on these special category income is 1,987,500. Now the balance income is 5 crore 30 lakh, on which we have to calculate tax as per slab rate. That 2.5 lakh nil, the balance 2.5 lakh, 5%, the balance 5 lakh would be 20%, and on above 10 lakh rupees, the slab rate would be 30%. So the tax accordingly would come 157,125,000. Now the question is, what is the surcharge rate? So today we have made the diagram, and you can see in this example, the other income is exceeding 2 crore rupees. First of all, we have other income also and special category income also. So we are falling in second option. In second option, there were three scenario A, B, C. When income including special income is up to 2 crore, this is not applicable. When income including special income exceeding 2 crore, so income exceeding 2 crore, so B could be applicable. But the C was when income exceeding 2 crore without including special category of income. So when your other income exceeding 2 crore, then C would be applicable. So C is applicable in this example. According to C case, the tax which is going to be applicable on a special rate of category 15% surcharge would be there. And on other case, under optional category, if it is more than 2 up to 5, the rate would be 25%. If it is more than 5 crore, then rate would be 37%. So in this case, on this 37 surcharge would be applicable, on this 15% surcharge would be applicable. Surcharge would be 298,125, and in this case, surcharge would be 6,111,750. The total would be, after including tax and surcharge, the total would be 238,11750 plus 4% cess, and then your answer would be here. This is for optional tax regime. If you want to solve this as per default tax regime, everything would be same, but the surcharge rate would be only 25%, because under default tax regime, even if income exceeding 5 crore, if it exceed 2 crore, the surcharge rate would remain 25%. Solution is in your book illustrations. These test questions solution has been given, and you can check your solution after solving this question with that. If there is any query, any differences, then you can let me know, or you can cross check it. It's a simple mathematical calculation, nothing else. So exactly the same thing is in illustration number 10, and almost a same question for illustration number, test question number 11. They both are similar. Let me see if there is any query. Very good. Well done. Almost everybody has given the correct answer. Arju is saying, is identification of rural area and urban area important from the exam point of view? Is identification of urban area important? Yes, of course, not identification, but the provision you should understand what is urban area, what is rural area. Clear? And an illustration, I guess, that was given in basic concept chapter, in which on page number 1.44, you have to at least know how to solve that. We have discussed the concept of urban and rural area. At least that question you should understand, that accordingly we have to answer that which area is urban or rural. Okay, any more? Very good. Ashwani is saying, sir, can you show me again the answer? We are on YouTube. You can scroll back and you can see the answer as many times as you want. Okay, so done. So we have discussed chapter number 1 problem completely. Now, after the short break, we are going to discuss chapter number 2, test your knowledge question, and then there will be MCQ questions also for all of you. Let me see if there is any query on query portal. There is no query on query portals. So, Mr. Nisa, can we have a small break? Nisa ji, can we have a small break?
Hello.
Mister, can we have a small break?
Oh, yeah.
Welcome back, everyone. I believe you must have your tea, coffee, etc. So the session now further extended to our residential chapter number 2 queries, etc. So let me see residential topic notes. You have to open it. So any problem in any illustration of residential status, students? We have discussed the residential status illustrations. I have given you from work illustration 1, 2, 3, 4. I guess 5 and 6 I had solved in the last class. So do you have any query in illustration number 1 till 6? If there is no issue in illustration, then we can move on to test your knowledge question, because we have to discuss also some MCQs which I have prepared for you. So I believe you must have gone through with the residential status illustrations, and I believe you have solved all of them. If it is so, then we can move on to the test your knowledge questions. So there are 7, I guess, question of test your knowledge. Somebody said something. Mustafa is saying no issues. Very good. Well done. Look, I believe that if you have revised the provisions, what we have discussed, and you have gone through with the illustrations, etc., then you might not have any issue in chapter number 2 also, because comparative to chapter number 1, chapter number 2 is easy because it has some specific illustration and questions and some specific provisions only regarding number of days, etc. And as I have told you earlier, whenever there is a question to find out the residential status, always remember one thing, that first of all, you have to identify whether this question is related to normal provision or a special provision. If you are able to find out that whether this question is connected with normal or specified provision, your 50% question is solved, because accordingly you will apply the condition on it. So if you just try to solve the question without understanding whether it's connected with my normal provision or special conditions case, that could create a problem in the solution. Okay. Purnima is saying, sir, thanks for chart, what you have given to us in the notes. That is very helpful. Yes, it takes a lot of time of mine to prepare those chart. And chart actually give a very clear picture. And I believe that chart actually remove a lot of confusions also, because when you seeing everything in a single paper, all the provisions together, so a lot of things are interconnected and you can understand, okay, this is how it is. When theoretically there are 20-25 pages you have to learn, then maybe you are skip with some provision. When you are reading on 10th page, 12th page, you might not able to recall what I had just studied on page number 1 or 2. But the chart solve this problem. And for the purpose of revision also, chart is very, very important. Chalo. So there is no, I guess, query in illustration. So we are moving on to test your knowledge questions. Test your knowledge questions. Ram, a citizen of India, Indian citizen, left India on 29 September for the first time to work as an officer of a company in Germany. Determine the residential status of Ram for the assessment year 26-27. Now Ram is an individual, citizen of India, going outside India for employment purpose. So these are the main important ingredients of this question. So according to these 4 information, now we know that is a specified category question. That is not a normal case, that is a special case. And as soon as we fall in the special case, that means only first condition need to be fulfilled, and that is more than equal to 182 days. in India, then he would be a resident. Now he left India on 22nd of September. So from April, 30 days, May, 31, June, July, August, and 22nd of September. So those are 175 days he was in India. Now let me tell you a very interesting and very important thing also. Suppose some student calculated these days 174, wrong calculation, or 176. Answer would not change. He would still be a non-resident, but your marks would be deducted. So the days calculation must be accurate. You cannot say, okay, 174 days, how does it matter? My answer would be non-resident still. No. It's a very simple thing. You have to understand to calculation of days should be exact in the examination, and you have to show these calculation also in your favor. Okay. Special case, special case, special case. Correct. He is a non-resident. Well done. Ashwani is saying non-resident. Correct. So one is solved. Now second, Mr. They residing in USA since 1990, visit India for 30 days every year. This is the kind of question we have solved. What Mr. Balamurgan asked, exactly the question we have solved today. There was 50 days in place of 30. Everything else information is same. So we have already solved this kind of question. The answer would remain the same. He would be a resident and not ordinary resident in question number 2. So not going to solve it again. Now question number 3 we have to discuss. Yes, even one day is wrong. That would matter. Maybe you will, there would be deduction of marks. Mr. Gottlieb, it matters. Even one day he might change his status. It could change, but even if it's not changed, the wrong day's calculation would result in deduction of marks. Okay. Chalo. Third is Ramesh and Suresh are brothers. Very good. Good to listen that. And they earn the following incomes during financial year 25-26. Ramesh settled in Canada in the year 1996 and Suresh settled in Delhi. Compute the total income for assessment year so and so, excising the option of shifting out of the default tax regime. That means optional tax regime income we have to calculate. So because Ramesh is settled in Canada from 1996, so that means he is a non-resident and Suresh would be a resident and ordinary resident in India. Clear? So according to that, we have to calculate the income. Ramesh could be a deemed resident also if his income exceeding 15 lakh rupees, etc. But in this question, I have already seen that income does not exceeding 15 lakh. So his status would be non-resident. Now we have to tell which income is going to be taxed in India as per the information has been given in the question. So interest on Canada development bonds, only 50% of interest received in India. So in case of Ramesh, 17,500 is going to be taxed in India. In case of Suresh, full 40,000 is going to be taxed in India because a resident and ordinary resident needs to pay tax in everything. Whatever he earned India, outside India does not matter. Dividend from British company received in London. So not going to be taxed in India, but yes, it's going to be taxed in India. Profit from business is Nagpur because the business is in India, then how it is matter where from it has been controlled. If business is in India, that means directly arise in India. So it is taxable for both. 1 lakh for Mr. Ramesh, 140 for Mr. Suresh. Short-term capital gain on sale of share of an Indian company. Again, Indian company arise in India, deemed to arise in India, tax will for all. 60,000, 90,000. Income from business in Chennai arise directly in India, taxable for both. Me. For technical services rendered in India. If services rendered in India, that means arise in India, taxable. Interest on saving bank deposit in UCO Bank, Delhi, taxable for both. Agricultural income from a land situated in Andhra Pradesh, that is in India. So that is going to be exempted for both. Rent received in respect of a house property in Bhopal, that is in India, but 30% would be deduction. So 70% only is going to be taxed, 70,000 and 42,000. Life insurance premium paid is not an income, it is an expenditure for which you can claim deduction. That is in later chapter we will discuss. So for the purpose of residential only we need to solve from point number 1 to point number 9. If you will calculate them, the total would be your total income. If you have any problem in any of these points, let me know. I will tell in detail. Both, no, look answer in case Indian company. Yes, both. And you will see how easy these are. Do you think there are any difficulties? And when we were studying this topic, you were feeling, okay, how much difficult provision we are discussing? There was nothing. Until the provision, what we are discussing has been completed and we have practiced some question, you will always feel the topic is difficult. Else, that is easy. Everything is easy. I'll make you explain each and everything. Ashwani is asking 9 and 10 point. 9 is house property, and you might not attend the last class of our session, Ashwani. If you have any income from house property, there is a rule that 70% is only going to be taxed in India, and that is going to be discussed in income from house property chapter which we will discuss after salary topic. So that is a provision of house property topic. But for time being, I'm explaining you in case of house property rent, only 70% is going to be taxed. So that's why we have to take the 70% of it. The detail will be discussed in income from house property. 10th point is a deduction expenditure. It is not part of my income. That is going to be discussed after deduction topic. So 10th is not relevant for you. We just need to solve from point number 1 till point number 9. Second chapter is easier. No. Second is also easy and first is also easy. Nothing is difficult. Clear? Okay. Riddhiben is saying residential status is the easiest chapter. I've told you. Mustafa sir, they deduct 7K and 10K. That is for interest, and that interest is deduction. So deduction topic we are not discussing. We will discuss it after deduction chapter. Do not bother about it. Why in question is mentioned? Because for deduction purpose, due to point number 10, they have mentioned optional tax regime. Because in case of optional, there is deduction available. You will see the solution, but you do not need to bother about point number 10. Skip it. Deduction is not part of our topic till now. Both chapter is easy. Yes, of course. Moving on to question number 4 is theoretical. You can solve it yourself. Now question number 5, examine with reason whether the following transaction attract income tax in India in the hands of recipient or not. The question number 5 says salary payable by central government to Mr. John, a citizen of India, of 7 lakh for services rendered outside India, considering that he paid tax under the provision of section 115 BAC. So is that 7 lakh rupees going to be income deemed to arise in India in the hands of Mr. John? Is it taxable or not? Who will give the answer and why? We have gone through with the provision which is connected with this specific point. That is going to be deemed to arise in India because if government pays salary to a citizen of India who is outside India and rendering services on behalf of government, in that case we have discussed like ambassador etc. We are talking, for example, ambassadors, they will receive basic salary, allowances and perquisite. As per section 1017, these are exempted if received outside India. Only basic salary is taxable, but all these component will be deemed to arise in India. Okay. Moving second, interest on money borrowed from outside India, 5 lakh by a non-resident for the purpose of business within India, say at Mumbai. So if we use the funds in India, that is going to be deemed to arise in India and taxable. This is taxable. This is taxable because this is salary. No allowance and perk has been given. Directly salary has been written. So this would be treated as basic salary. Now, third point again will create an confusion because there is certain provision which is going to be connected with income from other source chapter and deductions chapter. Post office saving bank interest is 19,000 received by a resident assessee, Mr. Ram, age 45 year. If we exercise the option of shifting out of the default tax regime, you have to tell the taxable value. Now, this 19,000 would be income arises or deemed to arise in India, so technically taxable. But in the solution, if you will see, they will give you an exemption of 3,500, which is related from income from other source, and the deduction of 10,000, which is under section 80 TTA, which is connected to deduction topic. So after that, I guess 5,500 rupees taxable has been shown. So do not bother about these two provisions. We will discuss it later. In case of post office saving interest, there is an exemption of 3,500. That is a part of income from other sources. So this is going to be deemed to arise, but taxable value, you will see this. So do not worry about these 2 points. We will discuss these points later. Royalty paid by a resident to a non-resident in respect of a business carried on outside India. Now, this is not going to be taxed because if the royalty has been utilized outside India, in that situation, that cannot be the part of your taxable income. Legal charges of 5 lakh paid in Delhi to a lawyer of UK who visited India to present a case at the Delhi High Court. So where service has been rendered in India, that is going to be taxed. Any confusion in these 5 points? Yes, taxable, good. Embassy, deemed, taxable, taxable deductions, non-taxable, taxable, correct. Deemed to rise, taxable, good. Ashwani, everything is clear. Yes, Hina, with the van, everything is clear. Very good. Deemed to rise. In point third, I have told you if you are receiving interest from Indian bank or post office, that is deemed to arise in India and taxable. These 3,500 and 10,000 reduction, forget about it. These are not the part of chapter 2. These points would be discussed later. If you able to understand that yes, 19,000 is income deemed to rise in India, our work is done. Point 1, we have discussed Aditya in the last session. If government paid you salary outside India and if you are a citizen of India, that is going to be your deemed to arise in India. That's why it's taxable. When royalty is taxable, in case of royalty, interest and fees, we have discussed in the last class that if that has been used in India, that is going to be taxed. Everything is clear. Arju is saying, well done. Sure. Moving on to next. From the following particulars of income furnished by Mr. Ashutosh, age 65 years, pertaining to 31st March 26. Compute the total income of 26-27, assuming he's shifting out of the default tax regime. If you are a ROR, NUFR, NI. Capital gain on sale of land in Jaipur. So property is in Jaipur. So arise in India. 1.5. We can write it down over here. Taxable for both. Rent from property in Delhi. Let out to a branch of a foreign company. How does it matter? If the property in Delhi going to be taxed, but 70% is going to be taxed. Both. because it's a rent from house property. Agricultural income from a land situated in Nepal, received in Nepal. So if you are a ROR, that is going to be taxed, but for a non-resident, only two incomes are taxable: arise in India, received in India. So if you are a non-resident, third point is non-taxable. UCO bank interest, of course, taxable for both. Taxable. Income earned from business in London, which is controlled from Delhi. 35,000 is received in India. So for ORR, full value needs to be taxed. But in case of NR, only two incomes are taxable: arise in India and received in India. So received in India is 35,000. That is going to be taxed in case of this. This is question number 6. Gift received from his daughter on his birthday. Again, now this is connected with income from other source. And any gift received from relative is going to be exempted. So this is going to be exempted. Again, this is the part of income from other source. We will discuss in detail in that chapter. Past foreign untaxed income, not applicable. Fees for technical services rendered to Shine Limited, a foreign company, for business outside India and received also outside India. For ORR, it is going to be taxed, and for non-resident, that is not going to be taxed at all. Clear? Now, 7th point is for your homework. You can try that. If there would be any problem, we are going to solve it for you. Let me see any query. No query. So now this is MCQ time, and we will see a lot of questions. Stay one. So we have already solved some MCQs. Let me see, there's a query in query portal. Monisha is asking, sir, if in case of HUF or resident, while determining the residential status of Karta, if he is an individual who falls under the special category third, then what is the reverse condition of more? No, for the purpose of HUF, there is only two conditions you need to be checked, because there is no amendment has been made in HUF provision. So if HUF is a resident, then for the purpose of Karta, those two conditions need to be fulfilled only. More than 730 odd days and 2 years or more resident. Only two conditions you have to fulfill. There is nothing to do with the third condition of 120 days. Okay. So now we are moving on for MCQs. We have already solved 10 MCQs initially. From basic concept, we will start from MCQ number 11. Total income of Mr. Sudeep Jain is 50,80,000 from salary. Compute tax under both regime, under section 115 BAC and optional. So you have to calculate tax. And now you can see the income is just slightly above the 50 lakh rupees, on which surcharge start applicable. So that's why we have to see, or we have to calculate the tax as per marginal relief. And if we'll solve it, so in case of optional, how we will solve it? Step 1, you have to calculate tax on 50,80,000. I have already solved these questions. The tax would be 1336500. 10% surcharge would be applicable, 133 650. Total would be 1470150. And step number 2, now we have to take 50 lakh rupees tax. And that tax would be 1312500. Difference is 80,000 income has been increased, and due to which the tax is increased 157650. So tax is higher than the difference of income. So the remaining 77650 would be your marginal relief. This needs to be deducted from this value 77650. So that would be 1392500. 4% cess, and after that the correct answer would be 1448200. I will upload these sheets also today after the session with the correct option. So you can try it. If there is any confusion later, we can solve it. The same kind of case is Sudeep Jain is earning 1 crore 1 lakh rupees. So these are for your practice because there is some question related to marginal relief in the illustration, but these are more questions for calculation or for your practice in respect of marginal relief. So question number 12, correct answer is option number A. So you can try that later. Again, one more question, that is income is 2 crore 4 lakh rupees. In that case also, you have to calculate the margin relief and the tax calculation. Now, total income Mr. Sudeep Jain is 60 year, resident in India, and his income is 9,50,000 from salary house property. Compute under both regime, section 115 BAC and optional. Because income is less than 50 lakhs, so automatically there would not be any margin relief concept. You have to calculate tax normally. So now please solve this question and give me the correct answer. You need to tell me which option is correct. We have already solved a lot of questions regarding calculation of tax. Now you have to solve this question and let me know the correct answer in this case. Till that time, let me check if there is any query relevant for our. Hina is saying, sir, all provisions are clear, but sometimes I get confused or mixed with others. So how deal with this? Revisions and practice is the only solution. No other shortcut is there. The more you will practice, your confusion will be clear every time. Just try this thing. Whatever confusion you have, just revise one more time and you will see the confusion would be less than 50% and so on. So question number 14, correct answer is C. Because under default tax regime, up to 12 lakh, there would be rebate. So the default tax regime would be 0. And in case of optional tax regime, you have to calculate tax because the age is 60 year resident. So the basic exemption limit would be 3 lakh rupees. So up to 3 lakh rupees, there would not be any tax. The balance 2 lakh rupees up to 5 lakh, the rate would be 5%. That means 10,000. So remaining is 4 lakh 50,000. And the rate would be 20%. That means 90,000. So total tax would be 1 lakh rupees. No surcharge applicable, no rebate because income exceeding 5 lakh. So 4% cess, that would be 4,000. So the correct answer would be 1 lakh 4,000. Question number 15. Question 15 is total income Mr. Sudeep Jain is 40 years. Resident is 16 lakh. This is exactly like the illustration number 4 in your book 1.61 page. There are multiple cases, 3 cases, 45 years, 65 years, 85 years. Out of these 3, I have copied one first case that is 40 years. So you can see the solution from illustration number 4 also. Suppose Mr. Sudeep Jain is 59 year resident in India. The income is 11 lakh 20,000. So now you have to calculate tax under optional tax regime. So the correct answer of 16 is B. Normal tax calculation. I believe you will solve it easily. That was MCQ sheet 1. Moving on to MCQ sheet day 2 of basic chapter. So this is the moment of truth. And question number 1, general question. So we are not wasting a lot of time. Question number 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. These are easy questions. I will upload this sheet so you would be able to solve these very easily. I just want to discuss the important questions with you. MCQ number 13, exactly same we have discussed. This is 14th. Shifting out of question number 15, I want to discuss with you. That is with integration of agricultural income with non-agricultural income. Okay. So Mr. X, a resident of 47 years, has salary income is 20 lakh 30,000 and agricultural income 3 lakh 10,000 for previous year 25-26. Compute his tax liability for assessment year 26-27 if he is paying tax under default tax regime. So now you can see, first of all, because there is agricultural income, so your brain should tell you that have to check the integration concept. And to understand that whether integration needs to apply or not, the condition you should remember that is agricultural income must exceed 5,000. The non-agricultural must exceed the basic exemption limit. This is the case of individual HUF, AOP, BOI and AJP only. So you can see all these conditions have been fulfilled. So now step number 1. As per step number 1, we have to calculate tax on agricultural as well as non-agricultural. So on how much income we have to calculate tax in step number 1? Tell me. I will tell you the tax amount. You tell me on how much value we have to calculate tax in step number 1. Arju is saying the provision related to birthday of assessee on 1st April that has been mentioned in the basic concept chapter number 1. If any assessee is achieving the age of 60 year on 1st April 2026, if someone's birthday is on 1st April 2026, then he will be assumed as attained the age of 60 year on 31st March 2026. So that clarification has been already mentioned in the notes. You can read it out. After the rate of taxes of basic optional tax regime, there is a note in the box which has been explained with the help of an example also. Arju, you can go through it. Yes, correct. 23 lakh 40,000. We have to calculate tax on 23 lakh 40,000 in step number 1, assuming that it is a normal income. Correct, Sarah, exactly. Sarah Kasim is saying 23 lakh 40,000. Absolutely correct. Well done. So, step number 1, we have to calculate tax on income 23 lakh and 40,000 as per normal provision of default tax regime. And the tax would be 2,85,000. Now, step number 2. And you will see we will not apply surcharge on it because, of course, the income is less than 50 lakhs. Suppose this is 53 lakh 40,000. Then we have to apply surcharge also over here. But because the income is less than 50, no surcharge applicable on step number 1. This is my tax on step number 1. Now for step number 2, what or how much amount of income we should consider? Now tell me on how much we need to calculate tax under step number 2. 7 lakh 10,000 answered by Shamili. Well done. Yes, Shireen is also correct. 7 lakh 10,000. Tiwari Radhesham wrongly write down 71,000. It should be 7 lakh 10,000. So agriculture income plus the basic exemption limit, because we are under default tax regime. So the basic exemption limit is 4 lakh. So in step number 2, we have to calculate tax on 7 lakh 10,000. That would be 15,500. No surcharge applicable because this is again less than 50 lakhs. So that was step number 1. Step number 2. Now step number 3. The difference we need to calculate, that is 269,500. Now on the basis of, now what come? Rebate. Now on the basis of non-agricultural income, we have to find out whether rebate is applicable or not. And now you can see the non-agricultural income is 20 lakh. If it is less than 12 lakh, then we can provide the rebate. But because it is exceeding 12 lakh, so there would be no rebate. So now we have to apply 4% cess on it, and that would result in the answer what we want to find it out. And that would be point number A would be your correct answer. Understood? Well done. You all actually calculated yourself. Very good. Sarah. Good. Next question. Again, 16 is simple, theoretical, 17, 18, 19. Do we have any other important question? Okay, 21 and 22. Mr. Suresh, age 45-year resident, has non-agricultural income of 6,50,000, agricultural income earned of 50,000 rupees. Compute the income tax payable by him under the optional tax regime. So in this case, because optional tax regime is here, the step 1 would say calculate tax on 7 lakh rupees. Agricultural as well as non-agricultural. That would be 52,500. Second step would say calculate tax on basic exemption plus agricultural income. So agriculture is 50 and basic exemption would be 250 in this case. So technically we have to calculate tax on 3 lakh rupees. That would be 2,500. So 50,000 would be my tax. Whether rebate would be applicable, because my non-agricultural income was exceeding 5 lakhs, so no rebate. On this 50,000 rupees, I have to apply the cess 2,000 and my tax liability would be 52,000. Clear? And now 21. If non-agricultural income is 252 and net agricultural income is 40, age is 40-year resident, need to calculate tax under optional tax regime. Now in this example, you will see rebate is applicable. Kaise? Dekho. First point, you have to calculate tax on 2,92,000 rupees. Tax would be 2,100. In the second case, you have to calculate tax on 290. 250 plus 40. That would be 2,000 rupees. Now 100 rupees is your tax. Now rebate you will see depends upon your non-agricultural income. Your sorry, non-agriculture income is 2,52,000 and rebate is applicable up to 5 lakh. So because now rebate is applicable and the rebate says 12,500 or the amount of tax, whichever is lower. So the tax is only 100, so rebate would be 100. So in that case, the tax liability would be nil and A is the correct option. You get it? How we find out the tax calculation in this? Let me see the chat box. Let me see if there's any query on query portal. Okay. So that's how we need to see the rebate in case of integration and how we need to apply it. I hope it's clear right now. So now moving on to the residential status question now we need to solve. Who is this? सैयद हुसैन is saying, sir MCQ में सीधे टिक करेंगे या ड्राइव करना होगा? सीधे टिक करना होगा. Option you have to select the option. That's it. These MCQs based on chart table. What does that mean? These MCQs are based upon the chapter, not on any chart. Okay. Miss Sheikh Muna wants to ask something. Kindly send your query in chat box on the query portal. Okay, now this is residential status MCQs, and I believe these are also easy and simple. We will take the important MCQs, so that would be relevant. These are general things we have already gone through with these kind of provisions. Like question number 5, we have solved earlier. Question number 6 is simple. Okay, question number 7. Let's discuss this. X, an Indian citizen who is living in Delhi since 1980, left for Japan on 1st July 2022 for employment. He came back to India on 1st January 2025. So let me tell you, in the previous year 25-26, we need to check when somebody is coming to India or going outside India, that requirement needs to be checked in previous year 25-26 scenario on the basis of 25-26 scenario. Okay. On a visit and stayed for 4 months. His residential status for assessment year 26-27 would be. Now answer this question. Easy question for all of you. Question number 7. What would be the correct answer in this case? So first of all, you have to see what is happening in 25-26. What is the scenario? If somebody is coming for visit, somebody is resident, non-resident, citizen, non-citizen, POIO, not POIO, etc. Whether he falls in a special condition or not. What is happening in previous year 25-26, that's matter. So you have to see whether Mr. X does fall in a special condition or not. And those special condition we have mentioned in chart like A, B1, B2, B3. So there is no B1, B2, B3 in the act. That is for your convenience. I have made them as a point B1, B2, B3 for the purpose of examination. Do not write an examination that this case fall in B1, B2 or B3. There is nothing like that in act. That is B2. If you remember, okay, this is the case related to B2, then you can write it down that this case falls because a person visiting into India, he is a POI and citizen, so he needs to satisfy only condition number 1. Do not write that this is falling in B1, B2, B3. There is no B1, B2, B3. That's just to make you understand that when you are trying to solve a question, so you can identify Which case do I need to apply? Got it, everyone? So that does fall in the special condition because he was a citizen of India, went outside India, Japan for employment at the year 20 to 23. So that means he's now settling in Japan. He's staying in there permanently. Now a person who is residing in Japan, he comes to India. He's a citizen just for visit. So first condition of 182 days would be apply and he does not fulfill that. So that would be the non-resident is the correct answer. Got it, everyone? Special condition. Technically, it's a B2 condition. Next question. Mr. Paresh, a software engineer at ABC Limited, left India first time on 10th August 2025 for the treatment of his wife for income tax purpose, his residential status for assessment year 26-27. Whenever you are reading any question, then please do not think about the answer directly. Do not go for solution. First of all, understand the question. Put the question as per the provision. Like there is a way to solve a question. Like when you answer something, forget about the studies. When somebody asks you any question regarding anything about your life, about your academics, about yourself, there is a way to solve a question or to give an answer. First of all, listen it properly. Whatever somebody is asking, just listen it properly. Then process that question with your brain, what your brain thinks. Then speak. Generally, what happens, we skip the second part. We listen, we speak. We listen, we speak. That's the same way for solving a question. When there's a question, first of all, you have to listen that question. That means to understand the problem. To understand the question first. Then the second thing come, your brain should process it. That means you have to put that problem in as per the provision. What provision is going to be applicable, you have to think it. Okay, this situation is applicable in that provision. And when you apply the provision, then only you able to solve the question. What we do? We read the question. We start solving it without understanding which provision it relates. Like question number 8. First of all, what we should do? We should understand whether it's a normal condition case or it's a special condition case. So can you tell me question number 8 is a special condition or a normal condition case? Achit, you have sent a huge question. We have to read the question. Then I would be able to answer. And the time already 9:35. So you should ask earlier or it will take a lot of time to understand this question. Let me see if we will have time. Definitely we are going to solve it. Normal condition case. Exactly, this is the question which is normal condition case. Shireen is also saying, and if it is a normal condition case and he went outside India for the first time on 10th of August. So that means he did not came back yet in the previous year. So we have to find out the days April, May, June, July. And because normal condition case, so technically both condition would be applicable and of course both condition applicable, he would satisfy the second condition. 60 days plus 365 days. So he would be a resident and he went first time outside India. So to become a resident and not ordinary resident, he must be in India for less than 730 days. That is not going to happen because except this previous year, he was always in India, full year. So he must be in India for more than 730 days in last 7 preceding previous. in last 10 years, he never went outside India. So technically, out of all these years, he was resident in India. So 9-year non-resident condition also he cannot fulfill. So he would be a resident and ordinary resident in India. Clear? Any more query? No, that question. Let me read it if it will be able to understand. Mr. Anand, an Indian citizen, has been working in Dubai for the past 15 years. The UAE has no personal income tax. Yes. He is not liable to pay tax there. He earns a salary of 80 lakh in Dubai, which is received in his UAE bank account. This is his only source of foreign income. He also has business interests in India, which are wholly controlled from his Mumbai office. This Indian business generate a profit of 20 lakh per financial year. Okay. Anand visited India every year. So you can see he's having Indian source income and he's not liable to pay tax in Dubai. So he would be a deemed resident. Till now, as per the information, he visited India every year for personal reason. His physical presence in India during the relevant previous year, 24-25, was exactly 125 days. His total stay in India over the 4 financial years immediately preceding the relevant previous year was 400 days, all from his annual visit. Determine Mr. Anand's residential status for the relevant assessment year. So, let me see whether he was citizen of India. Yes, he was a citizen of India and he comes to visit. So, because he is not liable to pay taxes, he will fall in deemed resident category. But section 61A apply if section 61 not apply. So because he visiting India for 125 days in the previous year, and before that he was in India for 400 days. So technically he is fulfilling special condition number B, in which his source of income is more than 15 lakh. So he would be a resident as per special condition number B, third case, more than equal to 120 days in previous year and more than 365 days in 4 preceding previous year. So he would be a resident according to point number B, third category. Now, if you will solve this question further, he would be a resident and not ordinary resident because he was in India in last 7 preceding year only 400 days. And because he is only 400 days, he is less than 730 days. So he would be a resident and not ordinary resident. Okay, Mr. Anil? No, not deemed resident, because deemed resident would applicable under section 61A and it has been specifically written down that 61A applicable only if section 61 is not applicable. But in this example, if you see the B category, third point has been fulfilled because the citizen comes to visit India for more than 120 days in previous year plus more than equal to 365 days in 4 preceding previous year. So because he fulfill B third category case, so he would be resident as per section 6(1). Suppose in this case he is in India for 100 days only. Then this third category does not fulfill. Then as per deemed resident, as per section 6(1)(a), he would be a deemed resident. But in this example, he would be a resident and not ordinary resident as per special condition B third category. Now it's clear? Okay, so I guess other questions I will send it to you so you can try those questions with the solution, students. So time for a small story. Okay, Arju wants to listen. Okay, how many of you wants to listen a story? I want to see. Are you interested in listening those stories or you just want me to wind up the session? So if less than 10 students is ready to listen a story, there would not be any story. If that is more than 10, I am going to tell you a story. Yes, sir. Yes, sir. Okay, wow. So more than 25 at least. Oh, wow. 30. Okay, so you all are waiting for. Look, this is what I told you. This should be the interest when the lecture started. When I'm going to teach income tax also, as for the provision. You are so excited to listen the story. This much excitement should be for the provisions also. These are the stories. The residential status, how to find it out. You may feel it's boring, but these are a kind of story which will write your future. If you able to learn these provision, if you need able to clear the examination, these are all stories. How many days you have to in India, how to calculate tax. That's a kind of a stories also. So चलो भाई स्टोरी की बात करते हैं. एक बड़ी अच्छी सी स्टोरी है, छोटी सी. एक शॉपकीपर था. वो बलून्स बेचता था. वो गैस वाले बलून्स आते हैं ना, जो फ्लाई करते हैं, वो वाले. तो उसके पास बहुत डिफरेंट डिफरेंट कलर्स के बलून्स होते थे. और बहुत सारे बच्चे आकर उससे वो बलून्स खरीदते थे. एंड प्रॉब्लम क्या था कि उसके सारे बलून सेल हो जाते थे, बट उसके पास एक बलून था जो ब्लैक कलर का था. कोई भी बच्चा ना वो वाला बलून नहीं लेता था. सारे बच्चों को पिंक, रेड, ब्लू, ग्रीन, येलो एक्सेट्रा डिफरेंट डिफरेंट मल्टी कलर्स ऐसे बलून चाहिए थे. बट जो ब्लैक वाला बलून था वो कभी उसका सेल नहीं हो पाता. वो जो बलून था ब्लैक वाला, वो बहुत ही डिप्रेस रहता था, बहुत दुखी रहता था कि मुझे कोई भी बच्चा नहीं खरीदता है, मेरे साथ कोई नहीं खेलता. तो वो कभी सेल ही नहीं होता. तो ही वॉज वेरी सैड. अब एक दिन क्या हुआ कि सारे जो भी जहां उसकी शॉप थी वहां के सारे बच्चों ने डिसाइड किया कि आज हम रेस करेंगे बलून्स की. सब लोग एक एक बलून खरीदेंगे. एंड हम देखेंगे कि कौन सा बलून सबसे ऊपर जाता है, उसको जीता हुआ माना जाए. तो सब बच्चे शॉप पर गए और सबने एक एक बलून खरीदा. अगेन वही हुआ, सारे बलून सेल हो गए. एक रह गया, दैट इज ब्लैक. उसको किसी ने नहीं खरीदा. और वो आज तो बहुत ही सैड हो गया था कि अरे मुझे किसी ने नहीं परचेज करा. और वो तो बेचारा बिल्कुल डिप्रेस, आई एम वर्थलेस, आई एम यूजलेस. तभी वहां एक बच्चा आया और उसने कहा मुझे बैलून चाहिए. अब एक ही बलून बचा था. तो शॉपकीपर ने कहा मेरे पास तो एक ही बलून है, ये ब्लैक वाला, और कोई बलून नहीं है. तो उस बच्चे को बड़ा बुरा लगा कि मुझे ब्लैक नहीं लेना था, बट उसने फिर भी कहा चलो ब्लैक बैलून ले लेते हैं, कोई चॉइस ही नहीं है, क्योंकि रेस शुरू होने वाली थी. तो उस बच्चे ने ब्लैक वाला बलून परचेज किया. और ब्लैक बलून वाज सो हैप्पी. एंड जब रेस शुरू हुई और सबने अपने बैलून छोड़े, तो सबसे ऊपर कौन सा गया? ब्लैक वाला बलून, सबसे ऊपर. और सब बच्चे देखने लगे कि अरे हम तो इसको खरीदते ही नहीं थे, बट दिस बलून हैज वन द रेस. सो द प्रॉब्लम इज दिस, वॉट यू एग्जैक्टली आर, वो आपके आउटर से फर्क नहीं पड़ता कि आप कैसे हैं, आप कितने देखने में स्मार्ट है नहीं है. वॉट एवर इनसाइड यू, दैट मेक्स यू डिफरेंट. तो वो कलर डिफरेंट थे, काफी बलून अट्रैक्टिव थे. ब्लैक वाला सबसे अगली था उसके हिसाब से या बाकी बच्चों के हिसाब से, बट जो उसके अंदर था, जो गैस थी, जो उसके अंदर का टैलेंट था, वो सबसे बेस्ट था. तो व्हेन द रियल टाइम केम, उस बलून ने प्रूव किया कि आई एम द बेस्ट. तो आपके आसपास क्या सिनेरियो है, लोग आपसे क्या एक्सपेक्ट करते हैं, लोग आपके बारे में क्या सोचते हैं कि आपसे कोर्स नहीं होगा, आप अच्छी तरह नहीं पढ़ सकते. लेट देम से, आपके जो अंदर टैलेंट है, whatever dedication, confidence, intelligence, sacrifice you can do, वो आपको रेस में सबसे आगे लेके जाएगा. And when you will be a chartered accountant in race, everyone will recognize you. So it does not matter कि आप कैसे कपड़े पहनते हो, आपके पास कितना फाइनेंशियली स्ट्रांग हो, सब लोग आपके बारे में क्या सोचते हैं. मे बी सब आपको ब्लैक बैलून समझते हो, बट दिस इज द टाइम टू प्रूव देम. स्टडी हार्ड, बी अ सीए, एंड यू विल गेट द रिस्पेक्ट. जो सबको ऐसा लगता है कि आप शायद अच्छे नहीं हो, बाकी लोगों से कंपैरिजन में स्लो. तो दिस इज योर टाइम टू शो देम विद इन 3 or 4 years, इफ यू गिव योर लाइफ एंड योर करियर द whatever you can give to your career, like dedication, etc., then you can prove after 3 or 4 or 5 years that exactly you are the one. So आज आपके बारे में लोग जो भी ओपिनियन रखते हैं, कुछ भी सोचते हैं, लेट देम डू दैट. आप फोकस करो अपनी पढ़ाई पर. whatever talent you have, prove them. Your hard work, your sincerity will pay off. And prove them that you were the black balloon, you were the best, and you will be, you all were the. So how does it matter? Doesn't matter. Whatever inside in a person, that really matters. So people going to institute are commenting bad, sir, as I am strongly standing with ICAI classes, sir. Does not matter. Whatever you inside you, that will characterize you, the way you would be in the future. So that was the story for all of you students. Please revision karte raho, believe upon yourself, be confident, be positive, and one day you will be a CA. Everyone, CA Purnima, CA Riddhiben, CA Anil, CA Archana, CA Ashwani, you all could be the CA, and maybe we will see each other someday live. So take care. If there's any query, let me see. I will answer that. Yes, see Aditya, you too, of course. See Sara, see Archana, see Santosh. Talent is only important. See Saipa, see Dhanlakshmi, more queries. Mustafa is saying, sir, when someone says about their earning, I am calculating their tax. Oh, so difficult. Then teaching. I guess there's some lag. So, Mr. Nisarg, I guess session has been done. There is no more query left. So, can we close the session? Okay, I'm quite good in storytelling, not in teaching. Thank you for appreciation. Mr. Nisarg, can we close the session? Thank you.